The global financial markets experienced unprecedented turmoil following President Trump's announcement of sweeping new tariffs, triggering a massive sell-off and retaliatory measures from trading partners. The impact has been particularly severe, marking one of the most significant market disruptions since the 2020 pandemic. China delivered a sharp response, announcing an additional 34% tariff on all EU goods effective April 10th. This escalation sent shockwaves through global markets, contributing to the most significant market losses since March 2020. The S&P 500 suffered an extraordinary $5 trillion decline in market value over just 2 days, surpassing the previous record of $3 trillion from March 2020. Since Trump's election in November, the S&P 500 has fallen 12%, while the Nasdaq has lost over 15% and the Dow Jones Industrial Average is down 9%. The technology sector bore the brunt of the decline, with the Nasdaq entering bear market territory, falling more than 20% from its December peak. Apple, despite remaining the world's most valuable company at $2.8 trillion, saw its stock plummet 16% over 2 days. Tesla, whose CEO Elon Musk had invested heavily in Trump's campaign, has now given back all post-election gains and is down 5% since November 5th. The energy sector faced particularly severe challenges, with major refiners like Marathon Petroleum, Valero Energy, and Phillips 66 collectively losing over $20 billion in market capitalization. Crude oil prices reached 3-year lows, with Brent crude falling 5% to $65.58 and WTI crude dropping 7% to $61. Both benchmarks tumbled nearly 11% in their biggest weekly percentage loss since 2023. Federal Reserve Chair Jerome Powell's wait-and-see approach provided little comfort to investors hoping for signals of potential rate cuts. According to J.P. Morgan analysts, the tariffs effectively represent the largest tax increase since 1968, with economists at Barclays projecting inflation to exceed 4% this year, while predicting GDP contraction in the fourth quarter. Political reactions have intensified, with Republican Senator Ted Cruz warning about enormous risks to both the economy and Republican political prospects. He characterized the tariffs as potentially the biggest tax increase we have seen in a long time and warned of a potential bloodbath in the 2026 midterm elections if the economy enters recession. A bipartisan Senate bill requiring congressional approval for new tariffs gained additional Republican support, including from prominent figures like Mitch McConnell, Jerry Moran, and Tom Tillis. The market turbulence has affected corporate deals, with a planned TikTok assets spin-off being put on hold after China indicated it wouldn't approve the deal following Trump's tariff announcement. The proposed structure would have created a new based company with majority American ownership and ByteDance holding a minority position under 20%. Every sector of the market showed significant losses, with consumer discretionary performing least badly at -5%, and energy suffering the most at -8%. The CBOE Volatility Index, Wall Street's fear gauge, reached an 8-month high, while bank stocks globally face severe pressure, with the S&P 500 Banks Index falling more than 7%. Looking ahead, markets face continued uncertainty as the April 9th deadline for Trump's reciprocal global tariffs approaches. The severity of the market reaction suggests investors are bracing for potential further declines, with many traders reluctant to take long positions over the weekend. As Carol Schleif from BMO Private Wealth noted, no one wants to increase long positions going into this weekend with more tariffs kicking in and the potential for more headlines over the weekend. Adding to the market confusion, Berkshire Hathaway had to publicly deny false social media reports about Warren Buffett allegedly endorsing Trump's economic policies, with Buffett himself stating he would not comment on markets, the economy, or tariffs until Berkshire's annual shareholder meeting on May 3rd in Omaha, Nebraska.